Hey guys, thanks for joining everyone. I think we have a good group of attendees here in real time, and we're going to be sharing this entire recording afterwards publicly. So thanks to everyone for joining now and everyone else listening in. I'm Vlad, founder and CEO of Lighter. As most of you know, Lighter is a platform for trading derivatives and spot assets on top of Ethereum in a verifiable way. We've had one quarter since our TG at the end of 2025. And so starting with this call, we're going to be doing quarterly updates like this, where we'll talk about what we've accomplished, what's on the roadmap, and the vision for the big picture, take some questions and go from there. So thanks to our team for helping put all this together, and Sebas will be driving the presentation here. So let's jump into it. Okay, so what we'll cover today is first overview of what happened in Q1, metrics, learnings, some trends we're seeing, and so on. Then I think it'll be worthwhile to really spend some time on the vision. Different folks got involved in the Lighter ecosystem at different times. So I think it'd be great to step back and think about the vision and make sure everyone is on the same page about that, because I think some of our earliest OGs are familiar with the vision from meeting us at conferences or listening to podcasts. But some of the folks who join later on may not be as familiar. So it'd be great to talk about that. Then the next step after that, we'll talk about kind of roadmap for the next quarter, 2 quarters. So kind of medium-term priorities. So we're pointing out we're working on the product side, the technical side, and the go-to-market side there. We'll do a particular deep dive on partnerships, and then last half hour or so, we'll take Q&A from this group here. Okay, so let's start with metrics. So Q1, in terms of volumes, we did about a quarter trillion in volume Q1. And as most of you know, this was post TG. So certainly a drop from pre-TG volume, which a lot of that was driven by the incentives there. And I think nonetheless, it's still quite strong numbers. Then the revenues, 14.4 million total revenue. This is a combination of maker and taker fees. Of course, zero fees for retail. Premium tiers are paying fees. So this is total revenue for the quarter. Average open interest was below a billion here on average for the quarter. We've had different cycles. I think we can talk more about what's going on in the markets in a bit here, but in general, I think a lot of market participants are kind of staying on the sidelines when it comes to big bets on the crypto assets. There's a growing number of participants betting on real world assets. So there's been a bit of a shift in dynamics there with the open interest, but that's our average. Average daily active users is at around 25K for the quarter. And ultimately, what we're building is based on our technology. And so just we'll do deeper dives on the technical side in the coming weeks. But the system processed 27.4 billion orders over the quarter. That resulted in about around 1% of those resulted in executed trades. So that rounds out kind of where we are on the core metrics. So something else that's pretty interesting, I think, is the user retention numbers have been quite strong. The users that have stayed on post TG, who are traders who join Lighter to trade actively, as opposed to some of the others who came in primarily to earn points. Like the retention of this cohort has been quite strong compared to generally these retention curves for retail products. So we feel good about this. There's obviously more we need to do to increase top of funnel, and we'll talk about that as well. But from a retention perspective, we definitely feel good about these numbers. So I also want to talk about learnings. For the most part, we want to focus on moving forward, but it's good to be at least somewhat introspective here. And we've thought about kind of how this quarter went and things we could have done better. I think two broad categories I would acknowledge. One is real world assets. So if we go back, we were actually among the first to start listing real world assets in a meaningful way back in the middle of 2025. And so we were early to this, but then I think it's fair to say we kind of were a bit off the ball for, for a few months. And the reasoning at the time was like real world assets are still more of an experiment. There are lots of other asset classes, we can experiment with, and real world assets, we had pretty good market share, for example, of FX, right, in the early days. And then we didn't move aggressively enough in bringing on equities at the time, as well as, I think, even more importantly now, commodities, where we've had to kind of catch up there in terms of the liquidity. So I think our view at the time was like, okay, the way this will play out is that these real world assets will first get tokenized so that the spot itself is traded on chain, and then the derivatives markets will really flourish. And that's not, that hypothesis is not exactly how things played out in the market, right? So we're actually seeing quite a bit of activity in perps on real world assets even before most of those underlying assets are tokenized. So we have been reevaluating that in the past month, made a lot of progress in, I think for gold and silver, we're already kind of top of class in liquidity. That's for the commodities. For the energy commodities, we're quickly getting there as well. And we'll talk more about what we're doing on the equity side there. So I think both in terms of prioritization and then as it relates to specific execution there, for example, we were the first to list Korean perps, but the way we did it didn't take into account some of the ways that the market makers would prefer to have those quoted. So, again, another learning, I think hopefully now we will be able to address that in other geographies as well. So that's kind of RWAs. On the communication side, a lot of learnings as well. We see that kind of pre-TG communication is very different than post-TG communication, and we've had to adjust and learn as we go on that. I think one key thing here is expectation setting. We're operating in some ways quite a bit differently from most other projects. We are a US company. We're looking to get registered in the US. There are certain things that we do differently as a result of that. And we certainly feel strongly about those decisions, but at the same time, it would have been, I think, beneficial for the community for those expectations to be set beforehand as far as how we operate. And I'm sure some of this will come up in the Q&A, but we stand by the decisions that we've made as far as how we operate, but we acknowledge some of those could have been communicated earlier or in a way that's more helpful to the community. I guess another thing is just like being aligned that there's a lot of experimentation in what we're doing. I mean, there's some core principles that we're not experimenting with, right? Like, for example, things like building something that's verifiable, right? Or building something that's zero fees for retail. I mean, those are not experiments from our perspective, right? But other things like exactly how the staking utility works or how certain incentive programs work, like those are experiments. And we think projects should be able to experiment. Like, that's how innovation happens. But I think communicating that more effectively ahead of time is another learning. So, and I'm sure there are many others, but these are just kind of the two high-level categories that come up, and we want to acknowledge that to the community here. So some trends I want to show, we talked about kind of overall where we ended the quarter, but some promising trends we're starting to see. So this is a ratio of essentially real world assets relative to total. So you can see the volumes, especially as we started prioritizing real world assets more about a month ago. Like, this has grown in a significant way from kind of below, from being in the single digits to being 20, 30%. And then we see similar trend in the open interest here as well, where that started out kind of below 5%. Now it's in the double digits here. And we expect this trend to continue. Obviously, we've seen kind of weakness in overall crypto markets, a lot of risk off there. Certainly, we don't expect that trend in the long run, but in the short and medium run, the expectation would be that a lot more of the proportionally activity would happen with real world assets, especially kind of with the geopolitical factors going on now. Another really interesting trend here is we launched our mobile app in January, and as a result, the percentage of mobile to desktop, started out kind of around 10%. Now it's at 20%. So this has gone up. And I think in terms of how we think about retail, right, and Lighter kind of being accessible to traders anywhere in the world, whether you're a whale or trading with small amount of capital, like mobile is a really important platform, and we see positive trend there. I mean, we expect this to continue as we expand. Here we are showing kind of the buybacks. I think when we did the TG, we committed that the buybacks will become programmatic in a few weeks, and that's what, as you can see in the graph here, that's what happened, right? Like in January, they were a bit more dispersed as far as when they happened, and starting kind of in February, it's been kind of consistently programmatic from there, which has a lot of benefits. It's like it's more predictable to anyone who's participating in the ecosystem or understanding the token, but also from a regulatory perspective, programmatic buybacks are really important for the token to be a utility token. Okay, now I've talked about kind of where we are in Q1. Let's zoom out and talk about the big vision and why we're so excited about Lighter, right? Like, I mean, we've been building for a long time, and I think it's important to see kind of what we see as the future and what are the bets we're making on the future and where we see our place, right? So we we think about this as three pillars, right? One is full Ethereum composability. One is being in the US market. We're a US company. We've always built in the US. It's the biggest financial market in the world, and we believe it's moving on chain. So kind of being in the US market with a CFTC license is really important. And then we also believe that TradFi will move on to DeFi rails, and being kind of the platform that can happen on in a capital efficient and verifiable and secure way that's really exciting, right? I mean, I think that's kind of why we started building Lighter to begin with, right? So anyway, so these three pillars are each of them introduce some really significant unlocks, which we'll talk about next. And so when we talk about full Ethereum composability, right? So Lighter was always built on top of Ethereum. It uses zero knowledge proofs to verify that everything that happens on Lighter is, in a transparent way accepted by Ethereum as being fair. And what that would allow us to do is to reach the goal where any asset on Ethereum can be collateral on Lighter. And this, even if you put aside the TradFi bit of it, like even what's already in DeFi, right? Like it's over 50 billion in assets in DeFi on Ethereum. Like that's much bigger than anything on Lighter today or on any of our competitors, right? So that's a huge opportunity, and we're working hard to make this happen. From the technical side, this is probably the biggest priority for our engineering team, and it's a huge unlock in and of itself, but it also is tied to the other two, right? So let's continue here. Yeah, so we're also looking at the US market, and the goal here, we don't want to find, I think right now there's a unique opportunity, right? Like there's alignment between folks in the Senate and Congress. We've spent a bunch of time with them, and also the White House, and importantly, the agencies, right? I think CFTC would be the primary agency that would regulate something like Lighter. So right now it's kind of a unique time where there's alignment between all these different policymakers and regulators to bring DeFi to the US market in a way where it's not zero regulation, but it's not regulated in the same way as TradFi. So there's smart regulation, and folks like us are in the room to figure out what exactly that looks like. And so recently I joined the CFTC's Innovation Advisory Committee. The committee is going to meet, I think, for the first time in the next couple of months, but we've already kind of shared some of our thoughts with the agency on a high level. And certainly, there are many different ways, different approaches to DeFi. We have a view on how that should look like, yet still comply with the principles of trading and exchanges for CFTC. So we've also kind of, in terms of Lighter, we've started the process of getting a license for on-chain derivatives trading. And again, the goal here, we don't want to just have some kind of loophole like, oh, you can use this protocol in this way. And we actually want it to kind of go through the front door, right, and actually be part of the conversation for how DeFi should work. And A, we think that's the right thing to do. B, from a business perspective, that'll attract not only retail, but institutions, right? Like, how do we think about someone like a Citadel trading on Lighter? I mean, they would not trade somewhere without a license. And we believe that the kind of architecture we have, which is verifiable and open source, gives us an advantage to comply with whatever guidelines kind of ultimately emerge. Again, we don't claim to have the only good architecture. There are a lot of very smart people building protocols and building blockchains, but we're definitely part of this conversation from the beginning. And, we've gotten a lot of, the message of verifiability and open source and transparency has resonated a lot with folks we've met in DC, kind of actually in both parties, surprisingly. So that's been great. By the way, I see some questions coming in. We'll kind of start the Q&A section at the end, but appreciate folks already weighing in here. Okay, so the last part is, and this is kind of maybe where it all fits together, is TradFi on DeFi rails, right? So if you think about it, right now, there are TradFi-like assets on Lighter as well as on competing platforms, but the way it works now is not exactly where I think kind of the ultimate promise of DeFi has been, right? Because right now it's like if you're a market maker trading a Tesla perps on Lighter, right? Like then you need to hedge that position somewhere. Like you can't at the moment you can't trade the spot asset on Lighter, so you would actually have to hedge that position whether on spot or some other derivative on a TradFi exchange, right? So you need a balance sheet on chain and you have this other balance sheet off chain. So it's not very capital efficient, right? Like now it still provides utility in the current environment where you can trade on weekends and whatnot. But like so that's the real big unlock here is where actually the entire balance sheet can move on chain, right? So if you're one of the TradFi institutional players, it's not like you have this one book that's off chain and another book that's on chain and you're moving money between the two. It's like you like a big part of your business can live entirely on chain and you can actually hedge, do things like the basis trade directly on a platform like Lighter. And we think that our architecture, because it's on top of Ethereum security, is the preferred architecture for TradFi. Again, there'll be different, and TradFi is massive, right? Like different firms will make different choices over time. We wouldn't claim to be the only game in town as far as that, but we think our architecture is a really strong fit. And we've heard a lot of, in the conversations we've had with various institutional players, we've heard a lot of really strong messaging around like verifiability and Ethereum security being important. And so kind of being the most efficient platform for trading both spot and derivatives, being the DeFi rails for that, we think this is a huge unlock. And this ties into both of the other pillars too, right? In terms of for this to happen, we need to be regulated and we believe being on top of Ethereum. And so, for example, if one of the major banks, tokenizes assets, and maybe they're not, they're maybe running their own Ethereum L2 to do that. That's going to be composable with Lighter as well. So yeah, so we think that this is huge, right? And even a starting to make this year, if significant dent is that in this would be very massive, and this is a unique opportunity to do it both from kind of the political side and the technological side, and just I think we've seen that TradFi has really started to finally after 10-15 years to finally understand what the advantages of being on chain. Okay, so this was kind of we went up to 40,000 feet. Let's now talk more about the immediate roadmap ahead of us. So universal cross margin, right? So what this means is that like right now, USDC can be used as collateral on Lighter. We're going to be rolling out different forms of collateral. So the first one will be LLP. Just for some context, I think that our initial plan was we would introduce that first and then build out kind of a more comprehensive universal cross-margin system. We've kind of changed the sequence of that a bit, which means that we're going to roll out the whole system first, and then LLP will be the first, essentially like we'll tokenize LLP and it'll be the first asset that can be used as collateral, but then that system, we can quickly add others to it. So while it took longer to accomplish the LLP's collateral goal, it'll actually be faster to reach the final destination here. So then after that, we'll add USDT, which has been very interesting for folks to add, especially ones where that's their primary collateral. Then ETH and LIT, adding BTC to lighter spot is an important priority here. And then this is a bit farther out, more of a Q3 project, but ultimately, like, the risk margin model should take into account correlations. I mean, in a conservative way, right? Like, you don't want to be subject to an attack vector where correlations break down. But if you're long a spot asset and short the perp, or trading very correlated assets in the opposite way, like, you should certainly have more margin than if you're trading completely uncorrelated assets. So that's another aspect of this that will become important. So yeah, so that's one big part of the roadmap. Let's continue. Okay, so lighter EVM. This is a project we've been working on together with Axiom, a very brilliant team led by Yi-san, who's very well known in the cryptography space. In fact, we're going to be doing a technical AMA on that tomorrow, so we'll really dive in here. But essentially where we are now is we're ready to start for developers to start coming in to the DevNet. The idea here, right, is that kind of any application that runs on Ethereum can now run on top of Lighter. Let's say something like an Aave or Morpho or Circle, right, or Layer Zero, any of these kinds of applications, it can come into Lighter in a way where implementation by smart contract shares the sequencer with the ZK circuits that are highly optimized for trading that we've built. So we're excited about this finally coming out to developers, and the goal is to kind of roll it out in mainnet by some point, kind of end of Q2, early Q3. And one thing about this, right, is we've thought about, okay, what do we build in-house and what applications do we support, other developers building on top of the lighter EVM? One such example would be prediction markets, right? Like, I think for us, that's not really in our wheelhouse, but there can be some really interesting prediction markets that can be built that leverage the existing infrastructure and the liquidity that's already on Lighter. So, there are a lot of teams working on prediction markets. So, anyone who's building that or other novel applications, I hope we discuss more of those tomorrow. But, we think this is a really interesting place where teams can come and build on top of Lighter. So I mentioned some of the learnings from RWAs. So I guess specific solutions on that. On the liquidity side, we're rolling out market maker incentives that will focus on RWAs. And I think this maybe ties into the communication point as well, where we'll communicate these kind of as they happen as opposed to after the fact. Yeah, so that's going to be announced in the next week or two. We're in particular going to kind of follow a regional strategy where we're going to build on the initial rollout of Korean equity perps. As I mentioned, we were the first to do it. There were a couple of things there that we learned from. Not going to restart that in the coming days, but then we're going to introduce other types of markets. Again, this is not the full, TradFi vision where the spot is tokenized, but it's still something that adds a lot of value to traders today. So we're gonna work with kind of local market makers that do have a way to hedge these assets on the TradFi side right now and roll them out on Lighter. And then as it relates to spot assets, we're going to start with tokenized stocks. That's something we've been working on with a couple of partners as well. And so we expect that to start in Q2 as well. Another direction, we've talked about this in the past, as far as, I think thinking about what do we build in-house and what do we support other developers to build. So options we see as a strong application for the Lighter core because it's to implement a full end-to-end application for trading options with kind of the full order book and the different strikes and maturities, kind of the options that exist in TradFi. We think our tech is like a very good fit for that. And to implement that efficiently, you actually need to do the custom circuits and kind of utilize all the efficiencies there. And Options, we know one thing about it, right? It's proven to have a very strong track record in TradFi. That hasn't yet happened with on-chain trading, but that's there's a strong chance that'll change, right? And especially there's another thing here is that the license for derivatives would apply here as well. So the goal here is to build the application for, there are going to be steps along the way, but in particular, like something like a more simple type of option contract, like a binary option, but then to actually have full application that's similar to the TradFi options platforms, but on chain, kind of by end of Q3. Great. We're almost at the end of the presentation here. I know folks have questions, so excited to address those. But I want to talk a bit about partnerships, right? So today we announced the partnership with the Telegram wallet. We're very excited about that. And a couple of weeks ago, we announced the partner attribution program, which a bunch of builders have already been using. So just to kind of look at this in terms of custodial, non-custodial, regulated, not regulated, right? So the Telegram wallet is a custodial application that uses Lighter, and basically it's like sub-accounts on Lighter for all of their participants. It's not regulated, but it's kind of very, there are a lot of efficiencies here by using Lighter tech, both from a cost perspective and from an infrastructure perspective. There are other folks who've been using the partner attribution program that are not regulated and non-custodial. Essentially, like any builder can plug in to Lighter this way, and many already have. I think there also is going to be a whole range of other partnerships, some of which we're kind of that are ongoing that'll open up to either participants in US TradFi, right? Like anyone who already has, let's say, a brokerage license, and they can plug in to platforms that have an exchange license and their customers want perps like that, we would be able to provide that service once we're at a spot where we have that license. And then on the same thing on the non-custodial side as well, right? Like for there was the recent CFTC kind of opinion on wallets, right? Where if the wallet itself doesn't need to be regulated if it's a pure kind of pass-through application, but the underlying exchange has a license. So that'll open up to a bunch of wallets, neobanks, other kind of more applications that are a bit more crypto natives that would support the non-custodial side. So anyway, so a whole range of partnerships. We're very excited about the Telegram one announced today, and as well as the partner attribution program. So that concludes the presentation. Let's start the Q&A. We have some questions here.
Okay. Yeah, I guess one question that is about the process in terms of license. Can you dive a bit into the details of, what are the conversations you're having in DC about how to go about the license in general?
For sure. We've become pretty familiar with this, so I just want to clear up a couple of things. So there is kind of legislation at the level of Congress, right? The House and the Senate are working on the so-called Clarity bill. I think there's some misconceptions that in itself will just allow platforms like Lighter to immediately operate in the US. It's not, the bill is more aimed at DeFi in the sense of, spot trading, like assets that are not securities or derivatives. So anything that actually is a derivative, which perps very much are, would still need to go through CFTC. I mean, the bill will have some language that'll protect that category of projects, kind of future-proof it, so to speak, right? But and we feel very good about that, right? But even once that bill passes, anybody that wants to have a license will still need to get registered. It's not going to be something where if you just say, "Oh, I'm DeFi," then I can just do whatever I want, which we actually think is good, right? Because then if that's how it was, then lots of in any centralized project can just say, "Oh, well, we're going to call what we do DeFi now." So that's actually we actually think it's good. What's also good is the CFTC is really open to understanding exactly how DeFi works and how to make it work with their guidelines. And so we're working with them to figure out the best path on how to continue to operate in a decentralized way as we have and use the fact that it's open source and transparent to fulfill kind of their requirements and get a license that way. And so, and it's just like it's night and day, right? Like the agencies now are moving much faster and really understand this tech much more than the past. So there's still going to be a process, but it's going to be a faster process and with folks who actually understand these details and want to make it work and have this kind of on-chain derivatives trading happen in the US.
Cool. So we have one on prediction markets. Are you saying that prediction markets can be built by third parties on Lighter EVM for settlement slash resolution, but still use the Lighter club for trading?
Yeah, so it depends. I mean, we've talked to a couple of teams. Actually, I think both will be possible. But I think for some prediction market applications, it's not necessarily necessary to have the full order book. Like some of them will use more of an AMM structure or an RFQ structure. And then so then they can, in that case, they don't need to use the order book at all. They can just take some code that otherwise would have run on another Ethereum L2, like a Polygon or something like that, and run it on Lighter. I think for other applications that actually want to use the order book, we'll support that as well, and in future versions of the EVM. But yeah, we think they're going to be a class of applications that would work well if they essentially like can share the same balance sheet as like if their customer is already trading on Lighter, they can just come in and use their prediction market from the same balance sheet. That doesn't mean their prediction market needs to use the order book, right? It could be an AMM or an RFQ as well.
On strategy, with the mobile app and Robinhood listing, is the growth strategy shifting more retail facing, or are you still prioritizing institutional flow? How do you balance those two audiences?
Yeah, so we've always focused on retail and continue to do so with, I think, certainly with our own mobile app, with partnerships like the Telegram partnership, other ones that we have in the works. Certainly, there's a focus on retail. When we say institutional flow, that can mean different things. If by that we mean like a regulated institutions, then of course there's a lot of the work we're doing with on that regulatory side is going to be important to get those involved. If we're talking about the kind of existing on-chain trading firms, market makers, kind of large players who are doing things like funding arbs, we are starting some programs in actually in the coming weeks to make it easier for those to get in and out of large trades. So we are putting more effort there. And yeah, so I think we've kind of expanded the set of our go-to-market team quite a bit in the last quarter. So we're going to do all of the above. I mean, I think that's important to stay competitive.
Okay. There are like 10 questions on partner attribution. And one of those is, when will partners from the partner attribution program go live? So I guess, we have some news today and yeah, maybe touch a bit on the partner attribution program in general.
Yeah, so I think the partner attribution program, I mean, some of the partners already have gone live. We've announced a couple last week. There are more that are being, I think in the next week there are more that are coming as well. And one thing to say about partner attribution is that like other things we do, it is an experiment. We welcome feedback. We this is like when we I think there have been questions, okay, like how does the revenue split work and so on and so forth. I think we're starting it out and we want to get as many partners on board as we can and start to get trading activity as quickly as we can and figure out if you think about it, right, like the first 6 months of Lighter private beta, it was zero revenue for everybody, right? But that's how we quickly grew market share. So I think partner attribution, we look at it in a similar way. Like we want to quickly grow market share there and bring on many partners. And we're here for the long term, right? The goal isn't to like extract the most revenue from these partners on day one. And that's certainly not our goal at all. We want to work with different folks, figure out their use cases, figure out what their customers want to see, and then from there kind of figure out what the appropriate revenue split would be. And again, we're open to feedback on this and kind of the other programs we're trying.
On the market maker RWA incentives you mentioned in the presentation, how are you thinking of this program? Would this be in lit? Would this be in USDC? How are you thinking of incentivizing these players?
So I think that it'll be a mix. I mean, some of it will most likely come from the next season, season three. I think in some cases where we want to, this is kind of going back to the point about communication. I mean, there are going to be cases where, okay, like let's say this market maker can help us onboard quickly in a new in RWAs and kind of a new geography for us, and they might have certain particular things that they want to do that work for them. We're gonna make it work the best we can based on their alignment. I mean, I think for the most part, we want this to be part of season three, but if we're not going to be rigid about that, right? Like if it involves a mix of that and USDC or something else, we'll kind of figure it out if it makes sense for the ecosystem, right? Like ultimately, all these decisions are made in ways that maximize kind of growth and maximize value to the ecosystem.
I guess we can take one or two more. Could you explain a bit more what the purpose of the CFTC committee is? Why is it so significant? What are the types of notes that you're exchanging with other founders of the
Mhm.
committee?
Right. So the Innovation Advisory Committee is going to help the CFTC figure out a couple of things, right? Involving new technologies. These include prediction markets, DeFi, which is most relevant to us here, right? But also things like how to think about like AI agents that are trading on platforms, right? And some of the other members joining there include kind of the founders of companies like Robinhood, right? So the goal of this committee obviously is not to give anyone an unfair advantage. The goal of it is to have lots of voices in the room to think through these hard problems. We feel really good that kind of builders are in the room figuring this out, right? Because the CFTC, the new commissioner, the new chair and his team, they want to figure this out for the long haul, where it's going to be future proof, where it's not something where, you know, next term somebody else might come in and undo all these rules. Like then that would be pointless. And so I think their long-term focus and wanting to have builders involved in in kind of how are they thinking about these hard problems, like to us that's really encouraging, and yeah, it's great to be a part of it.
Let's do it to two more, Vlad, or what do you say?
Sure, sounds great.
Okay. When it comes to asset listing strategy, what do you think about permissionless listings? Would you go in that direction in the future?
Yeah, I think that we will. First, we want to finish some of these other big projects we're doing around RWAs and universal cross margin and get lighter EVM going. But I think this could actually be a great use case for lighter EVM as well. But yeah, I think certainly in the time frame of like 3 to 6 months, we think that that's where we want to be in terms of listings.
Cool. There's also a couple on questions around LLP, so I guess I'll just go with this, the simplest one. This I think encompasses all the rest of the questions. What are the biggest learnings when it comes to LLP? What do you think of its maturity, and what does it look like in the future?
So LLP, the role it serves for lighter has shifted a bit. I mean, I think that a year ago, LLP, like 95% of the liquidity on the platform was coming from LLP. Now it's much, it's very much a minority. I mean, I think LLP is there as a way to protect positions in case of big market moves. It's there to bootstrap new markets, and we're constantly kind of adjusting the strategy to improve the yield of LLP. But we actually think the fact that LLP TVL relative to overall has come down. I mean, we actually think that's healthy in the sense that that means there are lots of other market makers providing liquidity. And like a year ago, it was the case where at some point LLP was like almost half of the entire TVL, right? So that's actually probably not the right equilibrium. Maybe now we've gone a bit the other way. I think we've actually seen some pretty good yields the last couple of weeks, and yeah, we're constantly working on the strategy behind it, and it'll continue to serve its purpose, but it won't be as much of the dominant liquidity provider as it has been in the early days, bootstrapping liquidity.
Okay. So seems like a good place to tie the ribbon.
Great. Well, thanks everyone for joining. We will make this available publicly. If there are questions we didn't get to, I think everyone here is in touch with someone on our team, so please follow up with us there. And yeah, we will certainly be doing other events. We're doing the AMA on specifically on lighter EVM tomorrow. We'll be doing other posts and AMAs in between, but we'll do these events once a quarter. I think this was it was great to start this one. So thanks all.
Bye, guys.